Hello, everyone. Happy Saturday. Obviously, some crazy things happen in the market on Friday, right? So, in today's video, we're going to take a look at the next steps for the market. I really want to go over a trade that would have been a really good trade if you guys took it. So, I want to give you guys my reasoning for that. This video is going to be like multiple things in one. All right. So, I'm going to talk about the trade, and then we're going to talk about the overall market and what the next steps are for the SPY, the NASDAQ, the Russell. We're also going to be taking a look at the VIX, the bonds, the yields, and the large tech stocks. We also have to take a look at seasonality so that we see what happens in history. Now that the month of October is about to start, we have to see historically how October does, how November does, and how December does. All right. So without further ado, let's get started with the video. Okay, so this is like one of the mothers of all bear traps. Okay, so this is a 1 minute chart of the SPY, okay? And very simply, this works on the short side. This also works on the long side. So we're looking at the 1 minute chart of the SPY. We opened up, we had a big move to the upside. In the morning from 9:40 all the way to 10 a.m. We had a big move to the upside. Then at 10 a.m., things started to be very bearish, okay? So we obviously broke that high. We broke another high. We created a bear flag here as well, right? We created this bear flag. That broke. We made it another leg. And then people tried to go long over here again. And then what ended up happening? Another leg. And then we started to flush, right? We started to flush. This was a lot of weakness. Zooming out, very simply, what happened? So bulls tried to keep this up multiple times for multiple legs. One over here, and one over here. 3 times they failed. And then again, we had a big move to the downside. So what usually happens when a lot of people are seeing weakness and they're like, oh my God, the market already fell so much earlier and we have this flush down now over here. Oh my God, it's time to go short. Guys, that is the absolute worst time to start chasing a trade and to go short. Another huge reason why is because we know that 430 is major support on the SPY, right? When you get a huge flush to a major level of support, that is 100% a huge bear trap. You do not go short at a level of support here when there's already a lot of weakness already shown, guys. Never do that. The same applies to going long. So say like we're bouncing, we're trading, nice, comfortable. Boom, big huge green candle after a continued move to the upside. Big green candles, right? Huge move to a major level of resistance. That is not the time to start going long. Instead, going short here is safer because you cannot expect the bullish momentum to continue. Similarly, over here, you cannot expect this bearish momentum to continue. After a huge drop to a major level of support, you have to start looking at the opposite direction. We had 3 legs down. 1, 2, 3 legs down. 3 to 4 legs of support being broken. On that 3rd or 4th leg, there is almost always a very good bounce, and that is generally a really good opportunity to bounce. So this was the 3rd leg. You cannot go, so just to recap, you cannot go short after a big flush down to a major level of support. Instead, go long. And very simply, you could go long with a stop loss at the low. Nice, simple, defined trade. It is what it is. If it doesn't work out, then after a huge move like this, if it makes another leg, I would end up going long again with that same stop loss at the low here. And then eventually, one of these legs, it would work. So it will understanding that they are trying to make your stomach churn. They're trying to make you want to take the wrong side of the trade. So when they try to do that and show extreme bearishness at a level of support, don't fall for it. That is a bear trap. Instead, lean long. All right. So I hope this made sense. Next, let's get started with the rest of the video. All right. If you guys enjoyed this, and if, I'm helping at all, please make sure to like the video. Subscribe to the channel if you aren't already. Put on post notifications so that you get notified whenever I do post a new YouTube video. Also, if you guys are interested, I started free one-on-one 30-minute coaching sessions. Maximum 1 session per person per week. And essentially, if you guys have any questions about anything, you guys want to become better traders, anything at all, guys, book the session. I'm going to put the link in my bio and in the comments. Free 30-minute session, anything trading related. Speak to me one-on-one. And yeah, man, I genuinely want to help. And this is definitely something that I'm going to be doing for the next few weeks. I'm booked for all of September. And then I just looked, I'm also booked every day until Monday, October 9th, which is crazy. So yeah, so just choose a time that works for you. We'll meet one-on-one. We'll talk specifically about what your issues are with trading, what you need help with, and your journey and how I can help. And I know for a fact that I could help, and I really look forward to speaking to you guys. It's been awesome, and it's been a really, really great experience so far speaking to you guys. And yeah, man, I'm just very, very thankful that this is working, and I'm very thankful that, you guys are finding value out of speaking, and hopefully more to come. All right. So yeah, just go to this website, and the link is in my bio, calendly.com/HamidTrades to book a session. All right. So now let's start with the rest of the video. All right, guys. Monday is October 2nd, the first day of the new month of October. And according to Seasonality, in the beginning of the month, we get a bit of a push upwards. Okay. October, on average, gives a 1.3% return. 65% of the time, it is bullish. Then November, 75% of the time is bullish. And then December, 70% of the time is bullish. So these 3 months are generally very, very bullish times. But then when you look at October, we get a big push upwards and then an even bigger low. And then it closes the end of the month strong. Okay. So with that in mind, October, the first half of October can still be very choppy. Okay. Granted. So I just want to first show you guys the seasonality of the SPX over the past 20 years on average. Next, let's take a look at the news for next week. Monday, 10 a.m., we have ISM manufacturing data. And then 11 a.m., Fed Powell speaks. So this isn't a normal Fed meeting. It's he's participating in a roundtable discussion with workers and small business owners. Probably similar to what he did at 4 p.m. on Friday or 4 p.m. on Thursday, right? After hours. So it might not be a huge news event, but that is occurring at 11 a.m. And then we have some more news coming out Tuesday, 10 a.m. And then Wednesday, some more news, 10 a.m. And then Friday, we don't have any news during market hours. So what I'm doing is we need to be cognizant of news that occurs during trading hours. And the reason why that's important is because when these major news events occur, right, it's often a gamble to hold on to anything. So at 9:59 a.m., I sell the position because at 10 a.m., we could have a huge move to the upside or a huge move to the downside. I don't want to be holding on to any short-term positions. So that's why it's always important to go to forexfactory.com and to know what time during the day there's going to be major news events. All right. So Monday, 10 a.m., just make sure that we're not in anything. All right. All right, so before we take a look at the S&P 500 and the other stocks, we have to take a look at the yields, the bonds, the VIX, and the dollar. All right, so let's start off with the 10-year yield. The yields are very, very relevant because they have an inverse relationship to the market. Okay, so we're starting off looking at the yields because if they're bullish, then the opposite happens in the market. Okay, so once again, if the yields are bullish, then the overall market is going to show some weakness. Right now, this setup on the yields, not bullish. Not a bullish setup. You could clearly see that it has an upper wick, reversal, and then some downward momentum. Even if we get a bit of a pop heading into tomorrow, this is still a pretty bearish setup, and it should continue falling lower. So the 10-year yield doesn't really look that good, and there's still more room to fall down to a level of support. We haven't even touched that yet. So if the yields fall, then that's bullish for the market. All right, so that's the 10-year. Let's go ahead and take a look at the 2-year. 2-year yield. This is not bullish at all, right? So we can clearly see that there's some weakness here, but we have come back to this. We have come back to this level of support. Prior resistance becomes support. We came and wicked off of it. This is not like the most bullish setup. Once again, we could have a baby bounce, but momentum on the yields is quite clearly pointed to another move to the downside. But, you know, it's tough because the 2-year yield is technically right at support. Let's take a look at the 5-year. 5-year wicked off of the prior breakout support area, but this is also similar to the 10-year. This is not a bullish setup, and there's still room to the downside for us to come back. So once again, as there's room to fall lower, and as there's bearish potential on the yields, there should be bullishness on the market. All right, so now let's take a look at the 20-year. 20-year, same concept. This is not bullish at all. Huge wick to the upside with some follow through to the downside. There's still a lot more room to fall lower on the 20, and then on the 30, of course, still bearish, and there's a lot more room to fall. So overall, the yields look short-term bearish. Granted, they're at levels of support. We could get a baby bounce, but it would take an extreme amount of buying power for this to just completely bounce. I would be pretty shocked to see if this just makes a new high and just like whiplashes up. That generally does not happen. So currently, you know, the yields are showing bearishness, and with the yields showing bearishness, that should be bullish for the market. Okay, next, let's take a look at the bonds. Okay, so this is clearly the bonds are relevant because when there is a bullish move on the bonds, like a very nice, strong bullish move, then generally that move translates into the stock market. So it has a correlated relationship to the market. So what we saw on Thursday, was that the bonds wicked very, very low, showed new lows, wicked very low outside of the lower level of the Bollinger Band, and then Friday we bounced up. So clearly, right, if you were looking at the stock market, the bonds as well, this is not a huge bounce, right? But it is a bounce nonetheless, and it's a bounce off of some lows. It's risky to try to be bullish here, all right? Obviously, this is not the setup that you want to go long on. It's like risky, right? But, you know, we can easily come back here, but we would need to hold about the 50% of this doji candle or continue to move to the upside. But the bonds, technically, they're starting to turn up, and they're starting to be bullish. You could see that this MACD indicator as well on the bonds are looking to point upwards. So you can see the blue line is starting to point upwards. You can see that the RSI is also starting to point upwards. So things are starting to try to bounce out of being oversold territory. And the RSI is also oversold on the bonds, leaning to a bit of a bounce. So that is not the most bullish, but it's still technically neutral to bullish. It's not a bearish signal on the bonds. All right. So once again, if it's bullish on the bonds, then the stock market should also get some love, and it's bullish for the stock market as well. All right, next, let's take a look at the VIX. So the VIX is the VIX is important because it has an inverse relationship to the market. And basically, if the VIX is falling, then that is generally very bullish for the overall market. Okay? So just looking at this setup, in no way, shape, or form is this a bullish setup. Yes, we technically could bounce a little higher. So the VIX and the yields are all showing a bit more room to bounce. So yes, we could bounce on the VIX as well. We could continue going higher on the VIX. But this is a really, really weak setup. So even if we do get a bit of a bounce, we can continue falling lower. And that is what I'm assuming will end up happening. And if the VIX shows weakness once again, then that's bullish for the overall market. Another thing that is bearish on the VIX is that this MACD indicator is about to cross lower, which means that the momentum is going to be bearish. So if the momentum is bearish on the VIX, then that's bullish on the stock market, right? So once again, the VIX pragmatically, it is reversing outside of being very overextended according to the Bollinger Bands, and it is falling back lower. And generally when this happens, the 20 exponential moving average is usually a good target to the downside. So usually every single time we are very overextended, we almost always come and touch the 20 exponential moving average. Here we were very overextended, came back down. Here we were very overextended, came back down, etc., etc., etc. So we're looking towards the 20 exponential moving average as a area where we can at least touch on the VIX, and that as we fall lower on the VIX, it will be bullish for the market. Okay, so there's that for the VIX. Now let's take a look at the dollar. Okay, so the dollar also, you know, we were in an uptrend on the dollar, we failed, and now we're painting a bit of a doji, right? Once again, this is not bullish on the dollar. This is not a place where you want to be bullish on the dollar because we can end up falling lower. We could fill a bit of this candle, but we failed. This is a bearish move here. We failed. The dollar still needs to come back and retest these levels of support from where we initially broke out from. And if it starts to bottom out here, then maybe you could start being bullish on the dollar again. But this setup right here is bearish. And even if we get a bit of a pop, I would be shocked to see it break a new high. And instead, it should break Friday's low, in my opinion. So the dollar is important because if the dollar is showing weakness, then the market will be bullish. The dollar, similar to the VIX, has an inverse relationship to the market. So this is bearish. This is not a bullish sign. We failed at this uptrend level. It looks like we might just make a slow decline down. This is not bullish. Okay, so far we can see that the dollar, bearish. The yields, bearish. The VIX, bearish. The bonds, somewhat bullish. But the shorter term yields, somewhat bullish. Okay, so pragmatically, the large overall momentum of things is potentially bullish for the stock market in the short term. So there's that. Okay, now let's have some fun and take a look at the S&P, the NASDAQ, the Russell, the large tech stocks. Take a look at the equities. All right, guys, we all know what happened on the market on Friday. We had a big move to the upside, and then whiplash, fell down. Okay, but it doesn't make sense to just look at the indices. What tells the bigger story are the large tech stocks and the largest movers in the market, the AI, chip, and the large tech stocks. All right, so let's take a look at those first. Number one, the main reason why I was initially bullish was because of Google. Google was a big reason why. It's not the main reason, but at that point when we were looking at it a few days ago, Google was very overextended to the downside, and then it opened outside of the Bollinger Band. So this showed a clear potential for a bounce. And then I said the next day would be bullish, and then the upward target would be the gap to fill at this low. And we filled this gap at 134.50. And on Friday, we had a high of 134.89. So now the next step is, okay, what are these large? So as we're looking at these, if these large tech stocks are showing bullishness, then this bullishness is going to also permeate into the overall market and the SPY and the NASDAQ, etc. So we were just looking at the yields, the bonds, the dollar, and the VIX, right? Because we want to see which direction the indices are going to move. So we also look at the large tech stocks to also see which way the indices are going to move, right? So currently Google, it's technically holding support, right? This wasn't the most bullish candle on Google. We filled this gap and then obviously painted a red candle. And, this is not the most bullish setup. But what is interesting on Google is that the MACD indicator is about to cross over and become bullish. So when it does cross bullish, 1 to 2 days afterward, when this happens, it is good to either be neutral or bullish on Google. Okay, so technically, we're holding above support on Google. This isn't the best setup that we want to see, but the MACD indicator is showing some bullishness, and we basically just need to see if this 131 level can hold as support. If we end up breaking and closing below 131, especially breaking and closing below 130, then this we can end up making new lows on Google. But yeah, currently 1 day at a time, it's holding support. 130, 131 is major support. We need to hold above that. All right, Microsoft gapped up, a bit of a red candle, but similar situation to Google. MACD looks like it's about to cross above. So once again, the next 1 to 2 days, neutral to bullish on Microsoft. So, we failed at this level of resistance pretty perfectly, but Microsoft looks much better off the lows than Google does, but Google was the initial reason why the market ripped up. Like, Google was showing a lot of strength, but a lot of it came from the chips. We're going to take a look at those, but Microsoft is showing some strength. There is still more room to the upside on Microsoft. It's as long as it holds above 314, we should be good and continue moving upwards. Okay. Now, Amazon, very similar situation to Microsoft. The MACD indicators also pointed upwards on Amazon, right? Tesla, almost identical to the other two, and almost identical with the MACD indicator as well. As long as it holds basically the lows of the doji and the highs of like the previous days, then we could continue moving up. Not guaranteed, but yeah. So we took a look at Tesla, Microsoft. Take a look at Netflix. Meta is we failed at 308. So this is not the best sign. And then we also take a look at the MACD indicator. The MACD was about to cross above, but then this big red candle caused it not to cross. But it's also very close to crossing above on the MACD indicator on Meta here. So once again, it's doesn't look great, but it's showing strength. So pragmatically, so far, all of the large tech stocks are showing potential strength. Google looks the worst for a buy opportunity, but because Google was one of the biggest winners, money can start funneling into the losers, and that's why Microsoft and Amazon and Tesla look better buy opportunities. Now let's take a look at Apple. So Apple, it's interesting because the MACD indicator is pointed straight low, and what is going to cause this MACD indicator to start moving upwards is a big move to the upside on Apple. So pragmatically, once again, sort of similar to Microsoft and Amazon, etc. But it needs to hold this 170 level for it to continue up. But it is like it's starting to turn into a falling wedge a bit, and we just need to see if we end up skyrocketing out, right? So this is sort of a bullish setup on Apple. So now we just need to see if there's going to be some upward momentum and some buying pressure. But so far, pragmatically, the large tech stocks were showing some strength, okay? And they're showing some strength at levels of support. Okay, so now before we take a look at the SPY, the NASDAQ, and IWM, I want to show you guys the NYSI and the NYMO, okay? So these are good indications of when the market finds a bottom and when the market finds a top, okay? So currently, right now, we are very overextended on the RSI. As we've seen in the past, this happens, right? But we are also getting very close to the March lows on the NYSI as well. And this date ended up being a big reason why we had a big bounce, okay? So this was bullish on the market during this time. Okay, so let's just look at what happened in the past when this thing turned bullish. So for it to be bullish, it needs to flip black. When it's red, it's obviously bearish, right? But we're at this low here on the NYSI. Let's see what happened back in March when we got to this level and when it turned bullish. So it turned bullish on March 24th. And March 24th was right here. It marked a swing low. And from here, we just bounced pretty aggressively, right? So we jumped from 390 all the way to 410 in the next few weeks afterward, okay? So now the question is, are we going to get some buying power to hold at this level here? Is the current NYSI price going to hold? And what's interesting is that the price is continuing to fall while the MACD is creeping a bit upwards. And that could pose to be a bit bullish, but pragmatically, I just want to show you guys that we are getting to a March low on the NYSI where previously we bounced very dramatically, okay? So now I want to take a look at the NYMO. And the NYMO is showing a bit more bullish of a situation here. So let me just clean this up a bit. So the NYMO is already flipped bullish. And we could also see the NYMO, the MACD, is also about to flip bullish as well. We also crossed above the 8 exponential moving average on the NYMO. So if this crosses above the 50, if this crosses above the 50 moving average, as well as the 50 on the RSI, then that would really, really be bullish overall. And this is basically showing some bullishness. The NYMO is definitely showing bullishness. It's showing some buying power on the market. And, now we just need to see if the large tech stocks and everything can hold support and continue bouncing. But so far, the NYMO is showing strength, clearly. And the NYSI is at a level of resistance, or a level of support. Okay, so yeah, now we're going to take a look at the S&P, the NASDAQ, and the IWM. All right, guys. So we know that we had a big gap up and then we fell, right? But let's just see what the next steps are. So zooming out, right, with this fib level, right? I drew the fib level from the most recent highs to Wednesday's low, right? The 23.6% fib is almost a guaranteed level that we would bounce at. But the 38.2% fib is also a very high likelihood chance that even bears would want that level to bounce to, because this would still be a bear flag if we come back and retest the 38.2% fib. So this would still be another good opportunity to short. Trying to load up on shorts, once again, trying to load up on shorts at 430 or below is really, really risky. And it just doesn't, you would have to be very, very sold on extremely bearish momentum for you to be short over here aggressively, right? So at these levels, while all of the indicators, again, on the SPY, the MACD is also bullish. The yields were bearish, the dollar was bearish, the bonds were bullish, the VIX was bearish. Multiple reasons, pragmatically, guys, are pointed towards being bullish. Now, so look, we also held the trend line, right? We also held 427 on the SPY. I was saying 427 was a major level of support. We held this uptrend line. All of this stuff, guys, we were still holding. I forgot to take a look at the chips while we're taking a look at the SPY. Nvidia, AMD, and the chips were the main reason, alongside Google, why this market was bullish. We were taking a look at this uptrend line. It held, and then we ended up gapping up. So Nvidia gapped up and started looking like Microsoft, Tesla, and Amazon after it was already showing a lot of strength. So clearly, there's some strength still in the chips. When you take a look at AMD, clearly this is some strength in AMD. We did not even come back and retrace anything in this candle. We just kept up and just stayed high. So there is still strength in the chips. We were making videos about the SMH down here. Now look at where it is. So obviously we're at levels of resistance on the SMH as well as Nvidia and AMD, but this is strength. So now we need to basically just see if the strength in these leaders are going to permeate and start going back into the losers. So let's bring it back to the SPY. Okay, so the SPY, now is the time where we basically just need to, so look guys, we need to hold 424 on the SPY, in my opinion. We need to hold around 424, 425 on the SPY. If that, so let's just take a look. On Monday, this trend line is going to be 425.44. We need to hold at least 424 on the SPY for a continued move up. Or if, so look, if 424 breaks, then we are definitely going to see this area right here between 415 to 420 at least. And then we might even have another impulsive move down to 410. But my point is that going short aggressively before we even touch the 38.2% fib, guys, is really, really aggressive, and it's not necessary. It is very, very high likelihood chance that we are going to touch the 38.2% fib at 433. Generally, guys, like it's so rare that we don't touch that level. So keep that in mind. And you know, especially you look at the 1 minute time frame, guys. When we trade on the 1 minute time frame, we time and time again, I tell you guys, when we have a big move to the downside with multiple legs, we had what we made a leg here, one leg down, gap down lower here, we made another leg down, gap down lower here, we made a third leg down. When we are bouncing out of an extreme move to the downside, it's very risky to short. That almost never happens. There's like an 85% chance that we continue up higher. Like it's very, very rare for us to make new lows. But you know, there are the chances where we do make new lows, and regardless, we have to be open to that possibility. But I'm telling you guys, it is just bad trade. It's a bad trading habit. Even if this does make a new low, it's a bad trading habit to try to short the initial pop upwards here. Instead, what you want to do is you want to find longing opportunities. Same situation on scalping. When you're looking at the 1 minute time frame, if you guys are watching my lives all the time, when we have a big move to the downside, I never ever short on the first pop upwards. I always look to go long, wait for a pullback, or I wait for a pullback closer to this low, and then I go long there. So that is the safest trade to make if we get very, very close to this to the low here on Wednesday. If we get that, then that is like the highest quality risk reward trade that you would take to the upside. But that's my thought process. You should not be shorting here. Instead, look to short as we touch 38.2. It's a much better opportunity to short in between the 38.2 and the 50% fib. If you want to short there, go right ahead. But right now is not really the time to short because of all these different bullish reasons. The SPY is still holding above support, holding the trend line. Tech stocks are showing some strength. The MACD is showing some bullishness. All right, when we take a look at the NASDAQ is also above this trend line. And let me make a new fib level here on NASDAQ. So on the NASDAQ, we did touch the 38.2% fib. So, which is why, if the NASDAQ touched the 38.2, there's still more room to go on the SPY. And the fact that the NASDAQ is still holding support, we just crossed above on the MACD on the NASDAQ as well. So 1 to 2 days afterward, it's supposed to be neutral to bullish. So this is still showing the NASDAQ responded way better than the SPY did. When you look at the SPY, we gave back a lot of gains. We retested at least the 786% fib of Thursday's candle, right? But then on the NASDAQ, we didn't retest anything. We barely retested anything on the candle. We didn't even. This was the 23.6% fib, I believe, or the 38.2. We didn't even get close to 50% of this candle. So the NASDAQ is showing a lot of strength still. So the fact that the NASDAQ touched 38.2, if this can continue to hold above this support, it's showing strength. NASDAQ is showing strength. Large tech stocks are showing strength. And a lot of this weakness on the SPY is because of the IWM's weakness. So IWM also, obviously had a big red day. So that weakness was the reason why the SPY was also pulled down. So we could see that we crossed above on the MACD as well, similar to the NASDAQ on the IWM. So neutral to bullish momentum on the IWM for the next 1 to 2 days. We held the 176 level. Obviously, this is not the most bullish setup on the IWM, but we still have this gap to fill here at the 179.82 level. We only got to 179.16. So there's still about 70 cents left for upside on the IWM as well. Everything is really pointed to for a continued move to the upside. Regardless of how weak and garbage the IWM looks, the NASDAQ is holding things pretty steady and strong. Obviously, we fell at a major level of resistance. But all in all, regardless of the NASDAQ being at resistance like this, there's multiple different other reasons to be bullish. And this is trading at the end of the day. We add and we try to look at all of the different reasons, and we try to look at things with a blank slate, with a fresh set of eyes every single day, without any bias. And without bias, the yields look like they could give a bit of a baby bounce. The dollar also looks like it could give a bit of a baby bounce. The VIX also looks like it could give a bit of a baby bounce. So if all of those give a bit of a baby bounce, then we should get a bit of a lower move on the market. Pragmatically, that is what it's showing. But overall, the tech stocks are showing a lot of strength. The overall momentum of the yields, of the dollar, of the VIX is all bearish, which is bullish for the market. We're seeing the bonds bottoming out. We're seeing the large tech stocks bottoming out and showing some strength. So Monday, we could get a bit of a pullback based off of like the short-term movements of the yields, the dollar, and the VIX. But overall, the momentum is starting to shift forward. And this is fun. This is fun stuff. And I hope I did like a good job of explaining multiple different things. Once again, have to have a clear set of eyes. Put the bias to the side. We're here to make money. We're not here to be correct. We're not here to be correct about everything. We're adapt to the market, regardless of what's going on. It does not matter day to day. Don't marry one bias all the time. The reason why I'm currently bullish is for those reasons. If you could give me better reasons to be bearish, I will be bearish. But right now, those are the reasons and those are the conditions for a continued bullish move. And until those things change, then my thought process for being bullish is not going to change. All right. So, and that's the thing with trading. Whatever happens. We monitor things day to day and we make the best decision that we can. Whenever we can make decisions. All right. So I hope you guys have a wonderful weekend. Let me know if you guys enjoyed the video. Once again, make sure to like, comment, and subscribe. Do all that good stuff. Make sure to have some rest. Have an amazing Saturday. Have an amazing Sunday whenever you guys watch this video. Yeah, man. Take care. Love you guys. Have a good one.